Bloomberg Audio Studios. Podcasts, radio, news.
Katie, you haven't talked about this, but I watched 5 randomly selected minutes of the Golden Globes last weekend.
Oh my God.
And it happened to be the 5 minutes during which Snoop Dogg gave an award for Best Podcast.
And we won?
Something to aspire to.
Holy
we did
moly.
not win.
Oh, shoot.
We were not even, whatever like 7 tiers below nominated is, we weren't that either.
Our faces weren't in a box on the screen. It was Amy Poehler who won.
It was Amy Poehler,
right?
yeah.
I'm a huge fan. I thought you were going to talk about Timothée Chalamet and Kylie Jenner, but...
I was not.
Oh, well,
I didn't see those 5 minutes.
They're a PDA at award shows. I'm into it.
Okay. Hello, and welcome to the Money Stuff Podcast, your weekly podcast where we talk about stuff related to money. I'm Matt Levine, and I write the Money Stuff column for Bloomberg Opinion.
And I'm Katie Greifeld, a reporter for Bloomberg News and an anchor for Bloomberg Television. We actually have a lot to talk about today. Some of it's silly.
You. All right. What should we talk about first?
Do you want to talk about MrBeast?
I guess, yes.
This is
another
an
pop
article...
cultural phenomenon that I am glancingly familiar with.
I only read really the headline, and I feel like that's all I need to read.
Sure,
Shall I read it for you?
We're doing great. We're clearly the best podcast.
MrBeast nabs $200 million investment from Tom Lee's BitMine. MrBeast, if you don't know, we're talking about Jimmy Donaldson, better known as MrBeast, who is a YouTube phenomenon.
Yeah.
I've also not watched him, but he's a billionaire.
Yeah.
He's got an empire.
Yeah.
And now he's got $200 million from BitMine.
Another content creator who's more successful than we are. Yeah, he's got $200 million from BitMine. To me, the interesting thing is the BitMine more than the MrBeast. But
Go on.
Well, I mean, MrBeast is a content creation juggernaut.
Also, I should point out, it's for a stake in Beast Industries. Not the Beast himself.
No. He's a little synonymous. I do wonder a little, right at this moment, I had not thought about it previously, what the Beast Industries succession plan looks like. Because he is, that is largely an investment in the Beast himself.
Key man risk.
Key Beast risk. No, but to me, the interesting thing is BitMine, which is a fabulous company. Its name is BitMine Immersion Technologies.
Like a nice bath.
Yes. The reason it was named that is because 1 year ago, it had been for several years, a Bitcoin mining operation whose differentiating factor was that it immersed its Bitcoin mining rigs in a nice bath to keep them cool.
Amazing.
Yeah. I don't know a lot about the physics of this. I assume it's not just dunking computers in water. There's some more complicated thing going on. But immersion is in the name because they bathed their Bitcoin miners in cool liquid.
That is a really fascinating backstory because now they're better known as being the largest corporate holder of Ether.
Yes. In the last year, they pivoted away from being a miner to being a treasury company, and they pivoted away from Bitcoin to being an Ethereum company.
Didn't pivot the name.
Didn't get around to that yet. But so now they're like a treasury company with kind of $14 billion of mostly Ethereum, although also some dollar cash and some random stuff. And we've talked a lot about crypto treasury companies.
Sure have.
It was a great trade to do 6 months ago, 9 months ago, which is roughly when they did it. You could put $14 billion of Ethereum in a pot and trade to $28 billion and you'd be like, this is great. Now, if you put $14 billion of Ethereum in a pot, you trade to $13 billion. It's not as good a trade. And so there are a lot of people who run crypto treasury companies who are kind of looking around and being like, yeah, what are we going to do with this? And one answer is you have $14 billion, you can go make investments, right? So one thing that seems to be happening here is they're like, wow, we have a lot of money and just putting the next incremental dollar into Ethereum is not going to move the needle for us. But MrBeast is right there.
Yeah, it's pretty funny. I saw this read spike alert on my phone, and I think I described it to you in an email as it's very fun 2026 headline Mad Libs.
Yeah.
And for a crypto treasury company, in the opening weeks of 2026, maybe not a bad diversification play.
Yeah. Crypto treasury companies are going to generate a lot of 2026 Mad Libs because it's not as simple and obvious and good a trade as it was, but all these people have raised billions of dollars to do it. And now, now what, right? And the answer is MrBeast or some other weird answer that we're going to find in the next couple of months.
I do like this line from the article, and it's written by my very good friend Vildana Heinrich, so I don't want to dunk on her, but the move highlights the growing convergence between digital finance and the creator economy as crypto-native firms look to align with brands that dominate Gen Z and Gen Alpha attention. I didn't know that this convergence was happening.
So my take on this is that they have a pot of money. Like the thing they were doing with the money doesn't make sense anymore, so they're doing other things with them. They're like an investing firm. But you could have another view, which is more like what Vildana wrote, which is that crypto treasury companies will all say, we're not just an investment company. We're not just a pot of money. We are building a new digital asset infrastructure. And like one aspect of that in a lot of the presentations that crypto treasury companies made is investor education. We're going to increase adoption of whatever our preferred token is, right?
Yeah.
And so a lot of that was just like Michael Saylor, like putting up presentations and like, himself being an evangelist for Bitcoin. But there are other ways to do that. And one way is you give MrBeast $200 million and maybe in his vast content juggernaut, he says, hey guys, buy Ethereum. And maybe the price of Ethereum goes up. And maybe that makes the price of your pot of Ethereum go up. I don't know, man.
You forgot Saylor also posting AI-generated images of himself in various inspiring poses.
He's great. I mean,
say it.
He does it. He's great.
Does it.
He's either great or he does a lot of this sort of thing. But like the people who run the other not strategy crypto treasury companies, they maybe need some help from, the greatest content creator of his generation, I think they call them.
Yeah, that's the thing. I don't want to be too glib about MrBeast because Beast Industries, it oversees basically the YouTube business, which is YouTube's most watched series creator.
To be clear, we can't be glib. Like we have a podcast and he has a better podcast.
He certainly does.
No, Amy Poehler, but
Also in October, Beast Industries filed a trademark application for MrBeast Financial, which lists services such as a cryptocurrency exchange or cryptocurrency exchange platforms.
Synergies
and
everywhere.
Also consumer lending.
Yeah.
So, I mean, we joke now, but he's going to run our lives. The Jeff Bezos of his time.
Would you borrow money from a beast?
Someone would. Maybe these Gen Alpha people that we're talking about.
I've never felt more old, this whole conversation.
I've so enjoyed
You're
this.
so much younger than I am.
I keep telling myself I'm going to watch a MrBeast YouTube video, and I'm always looking for things to watch on YouTube. I mostly just watch SNL clips, and probably for market research or my job, it'd probably, at this point, be a good idea to watch a MrBeast video. Yes.
If you come away from it thinking, boy, I better buy some ether, then let me know.
I will.
Otherwise, don't.
I'll text you.
You know who else is a consumer lender who you wouldn't want to borrow money from?
Tell me.
Every bank?
Gosh.
Every credit card company? I don't know. My impression is that the average interest rate on credit cards is
super high.
30%, 40%, 70%, 8,000%.
I know someone.
It's high.
I know someone who wants to change that. His name is Donald J. Trump. Yeah. He's the president of the United States, and he would like to see those rates capped at 10%.
10%. Do you have anything to say about this?
I mean, it's pretty amazing. This isn't a new topic, right? And this 10%...
It's not like a traditional Republican Party talking point. It's like more of a, Elizabeth Warren introduced legislation sort of point. Like a Bernie Sanders kind of vibe.
Well, it's amazing because Bernie Sanders and AOC, I think they were advocating for like 15% originally, like back in 2019.
I'll do 10.
Yeah. So President Trump undercut them at their own game, which is pretty amazing.
Make it 5.
Yeah, why not? The banks, of course, are, it seems like, trying to one-up each other on like doomsday predictions of what this would mean.
Yeah.
It seems like the consensus is that they would basically offer less credit.
Right. Like I think a lot of financial columnists have bad intuitions around the credit component of credit cards because like I pay my balance every month. I get rewards. Credit cards are a way to get points and a convenient payment mechanism and not a credit mechanism. And the reason they're not a credit mechanism is because they charge like 20% interest.
Yeah.
And if you want credit, there are other ways to get credit. for some people, that's less true. And it's a standard form of consumer debt. And my assumption is that the rates are so high because, one, the default risk is high, and two, you're sort of getting adversely selected, right? Because the people who carry a balance are the people who are like not going to be able to pay it off. But there is like research, Brian Shearer at Vanderbilt has research on this that is kind of possibly underpinning some of these arguments, saying that the credit card industry is so profitable that it could rein in interest rates, save billions for Americans and small businesses, and still make profits, right? So like there's some fat to be cut here is something that some economists think, although you will not hear that from banks.
No. What you will hear from banks is the CFO of JP Morgan, for example, saying that if it were to happen, it would be very bad for consumers, very bad for the economy, and basically that their card operation would be a business that we would have to significantly change. And I've seen, Bloomberg News basically describe the cards business as like the crown jewel of banks.
Yeah. Well, I mean, the crown jewel of banks argues against JP Morgan at this point, right?
True.
If it's so good, then it could be less good and still, give credit to people. But my intuition is that they are right. And like, in particular, if banks had to cut my credit card interest rate to 10%, that wouldn't affect anyone because I don't pay interest on my credit card. Mm-hmm. But if they had to cut like the lowest credit score borrowers to 10%, they would probably do a lot less credit provision to those borrowers, right? And there would be, you'd see just a migration to credit cards being a less available product and for people with higher credit scores.
Yeah. And those people who would be cut out, seems like, again, the consensus would be that they would go to like payday lenders more who don't exactly offer better rates necessarily.
Yeah. I mean, I don't like the consumer credit right now is interesting, right? Because there's been a huge rise in buy now, pay later, which is often structured as zero interest, fairly short repayment periods. And loosely speaking, they make their money on like interchange, on like swipe fees, right? And so there would be some of that, right? But that would you'd probably get less credit provision that way, right? Like you probably couldn't run up as much of a balance on your buy now, pay later product. The other thing that Trump wants is to, like, he's also talked about swipe fees, right?
Yes.
Like you squeeze credit cards from both ends, right? And like if you're a credit card company and you can charge a lot of money in swipe fees, then like you can make a lower interest rate work in some form for some time. But if you both have to give up your swipe fees and you have to give up your interest, it's like a much worse product.
Yeah. I am really interested to see what happens over the next couple of days with this because we're recording this on January 15th.
I'll tell you what's going to happen over the next couple of days.
Okay.
Well, no, I shouldn't say that. My general instinct is nothing, but like things are crazy now, so maybe.
Well, specifically, I'm referring to January 20th.
Yes, that's when if you don't stop charging more than 10% interest, you'll be in violation of the law.
The law.
The law. What law?
That's what I would like to know, and that's what I was going to ask you.
It's the secret law in Donald Trump's head.
Well, apparently a lot of these banks are going to be in violation of it.
It does seem that way.
You know who won't?
Bilt.
I love it. Bilt is seizing the moment, unveiling 3 new credit cards with interest rates capped at 10%.
That's not true, right? Isn't it a 1-year promotional rate?
Yes.
Because that's the really interesting thing about this. Like, Trump is not like credit cards can only charge 10% for the rest of time. He's like, for the next year until the midterm elections,
yes,
you have to charge 10% or less. And, credit card companies do that all the time. All the time they offer like 0% introductory rates, right? Like, you can like have some sort of promotional program that charges 10% or less to attract customers, right? And then, eventually jack it up to 30%. But
yes,
what a great time to have a promotional program. And by the way, these promotional programs, like you often see people being like 0% introductory APR for the first 6 months. Right? Bill is like 10%, no problem. 10% introductory rate for 1 year.
It's on new purchases only.
It's a great combination of politics and marketing.
Yeah, I'm trying to find all the different asterisks here. But yeah, it is great promotion. And I mean, you haven't really seen anyone else, or at least not in like a big splashy way like this, sort of take advantage of this moment. It's mostly been pushback from the banks.
Yeah, because if you're a bank with a longstanding portfolio, and then you're like 10% introductory rate on our new card, like it's a little bit like people will notice that you're mostly not charging that. Right. Bilt, I think, has some advantages in my impression is like they have fairly high credit quality and like they're the pay your rent with a credit card thing. Like I think they have probably different economics from a regular bank.
Yeah, we were talking about this earlier in person.
Oh, yeah.
That we've talked about Built on this podcast before, and I forget.
I didn't believe you when you told me that.
I forget what.
I still don't.
What the specific. We've definitely talked about it on this podcast, but yeah, they have a really interesting model. But yeah.
I asked you how it worked and you didn't know.
I didn't know.
I don't frankly know either, but like my impression is that like you can't normally put your rent on your credit card because like that'll cost your landlord, a 3% interchange fee. But Built has negotiated with landlords to make them like Built so much that they can charge rent on their credit card.
And now mortgages.
And now
you
mortgages.
Can pay for your mortgage with your Built card.
They have enough like moving pieces that like, the 20% interest on balances is not the most important part of their business, and they can go around being like 10%.
Yeah.
There you go, Donald Trump.
Yeah. The countdown's on. You know, as of right now, we're 5 days away from all those law violations.
I still think the answer to what will happen on January 20th is nothing. But what if they're all arrested?
Arrested?
Yeah.
That would be
they're violating the law. What law? Nobody knows.
We'd have an emergency podcast.
I would not
crazy.
have an emergency podcast. I'd go into hiding.
Is there anything else to say about this specific topic?
I'm sure there's a lot of things. My impression is that people on financial television and frankly in financial journalism have been talking about it pretty nonstop for a week.
You know what's amazing?
But not me.
I would have been one of those people, but I spent the first half of this week at the JP Morgan Healthcare Conference. So I was watching these headlines fly by. And
was Jamie Dimon there?
No, not this year. At least that was my understanding.
Right. He's too busy dealing with credit card rate caps.
Yeah, because...
and Jay Powell, a lot of stuff.
President Trump
going on.
Sent that Truth Social last Friday night. I remember it was at night. I was on my couch.
You were on your couch looking at Truth Social as you do.
No, I wasn't. I don't have a Truth Social account, but everything that he posts then read spikes on the terminal, so I get it through my app anyway. Yeah. So it's like having a Truth Social account, I imagine. I don't know what the other posters are up to. I don't know if it's a one-man platform or what. Someone, let us know.
Greatest content creator of our generation.
True. Beast mode.
Speaking of healthcare.
Yeah, go on.
I read this week about this lovely, terrible insider trading case. These three brothers are accused of doing all sorts of insider trading. I think they're healthcare people. I think they worked in healthcare banking, or at least one of them did. And they do a lot of trading in healthcare stocks and allegedly insider trading and market manipulation in healthcare stocks. And some of the accusations are wild. The thing that was of most interest to me is I love insider trading.
Yeah,
and
doing it.
So the main thing they're accused of doing is just standard stuff, right? They had a friend who the one guy had worked with him, and he was a fairly junior banker at Lazard. He was a healthcare banker. And so he had some information about Lazard's healthcare deal flow, and he would just tell his buddy, allegedly, hey, this deal is coming. And the buddy would allegedly trade options and made $40 million, right? Or the ring of them made $40 million. And in exchange for this, the brother gave the banker gifts, including a Rolex watch.
Fine.
Help in drafting slides for a PowerPoint presentation that he was preparing as part of his job at Lazard, which is
cute.
Really... He's facing up to 25 years in prison or whatever. And help on a PowerPoint.
I want to see the PowerPoint. There's probably a heck of a PowerPoint.
It can only be so good.
Yeah. I mean, that's what you say now.
No, if you were doing a PowerPoint for your banking job at Lazard, the floor is high. It has to be good, but the ceiling is low. It can't be that good. And I also gave him advice and assistance in his search for a new investment banking position, which did not work out well because it's hard to keep an investment banking job once you're charged with insider trading. I feel
the most valuable piece of advice probably would have been to stop insider trading.
Yes, the one piece of advice he could not provide in the circumstances, but yes. But so that's most of what they did. Most of the money that they're accused of making, but they also did other wild stuff, including insider trading on drug trials, right? So you have a biotech company, it's trialing a cancer drug. If the results are good, the stock will go up. If the results are bad, the stock will go down. And so they allegedly set up fake email addresses for fake doctors and would email the people doing the trial to be I have a cancer patient who would like to be part of the trial. And they'd be okay. And then he'd be can you tell me how it's going so that I know whether I should put my cancer patient into the trial? And they'd allegedly get information that was useful for a hypothetical doctor, but also useful for an investor, right? Because if it's like, the trial is going very well, then you can buy call options on the stock. And so they allegedly did that. They got some information. Apparently it wasn't like market moving enough is my impression, because instead of using that information to trade options, they also like made up fake information saying the trial was going really well. And then instead of like putting out a fake press release or just like talking about it on Twitter, they like very subtly created like fake profiles on cancer support sites and like leaked it in a way that didn't seem like they were hyping a stock, but that made it seem like it was like legitimate medical information. And then they took that and leaked it on Twitter, and like the stock went up. They didn't make a lot of money on this. This is very convoluted.
They made like $250,000.
Yeah, but they made like $40 million on just straightforwardly being told about mergers, right? So
that's true.
It's like, that's a better deal. But this was a very sophisticated and interesting form of insider trading that like it didn't work as well as the regular form of insider trading.
It seems more evil.
Oh, yeah. Oh, yeah.
Given that we're talking about like breast cancer drug trials.
Right. It's gross. But also like you could imagine the upshot of this being people who run biotech companies and doctors who run drug trials thinking, oh no, we have to worry about insider trading by the doctors and patients in this trial, and sort of having more safeguards to prevent that in a way that is bad for cancer patients, but that like, you know, prevents this sort of insider trading, right? It's like, if you're a cancer patient and you go to a drug trial, like nobody's like, oh, you better sign this piece of paper saying that you want insider trading on it, and we're going to monitor your trading. It's just not that important.
And you're like, that is so far from
exactly.
What I'm thinking about.
It's not far from these guys' ideas. And so now it's like you've sort of made the whole drug trial process a little bit worse for everyone.
I was going to say that unfortunately it feels like drug trials, especially for small publicly listed biotech stocks, are like sort of the perfect place for this sort of thing.
Yeah, and there's tons of insider trading on them, or like cases, but they're never patients. They're like a consulting doctor is leaking to a hedge fund analyst. You know, there's a long history of people worrying about insider trading in drug trials, but for the patients, it's kind of a new low.
Yeah.
For like the fake patients.
The fake patients themselves.
Right. I wrote about this and I was like, hypothetically, if you were a patient and you took the drug and it worked really well in your case, and then you bought call options on that, would that be insider trading? And the answer sort of depends on what you've signed, I think.
Yeah.
Legal advice. But also like, no one's going to come after you. Like, come on. But like, yeah, these guys kind of ruin it for everyone.
Well, in the setup, you did ask the popular question that, you know, say you were on a Boeing plane that was going down.
Yes.
And
I've written about that one.
That's
like a big Reddit thing.
Well, what was the answer? Like,
I think that's
insider?
fine. Yeah. So this is like a Reddit thing that people sent me a lot when it was first posted, and then periodically sent me every month since. But there was that Boeing plane where like the door popped off in midair, and it was pretty harrowing for the people on the plane. And someone posted on Reddit, if I were on that plane, could I have bought put options on Boeing? Would that be insider trading? And my answer is not legal advice. No, it's fine. Like that's, you know, it's like you're using a product, right? Like it's like if you have an iPhone and like you don't think it works very well, you can sell Apple stock. And if you think it works great, you can buy Apple stock. Like this is normal. People interact with the stock market as like you experience the company's products or services and then you trade on it.
I guess if like you're on that plane and you've called all your loved ones, everyone you would want to talk to, and you have some extra time, that it's not unreasonable that you would think to buy puts.
I feel like the framing of the question in Reddit suggests that like you don't have that many loved ones. Like
God.
You're kind of a degen. But yeah, sure.
Yeah. I like to make everything personal.
Right. I would not, I think, have the presence of mind to buy puts on Boeing.
No.
But I guess the point is like the plane lands maybe. But anyway, point is I think it's fine. But it's not legal advice. And that was the Money Stuff Podcast. I'm Matt Levine.
And I'm Katie Greifeld.
You can find my work by subscribing to the Money Stuff newsletter on Bloomberg.com.
And you can find me on Bloomberg TV every day on the close between 3 and 5 p.m. Eastern.
We'd love to hear from you. You can send an email to moneypod@bloomberg.net. Ask us a question and we might answer it on the air.
You can also subscribe to our show wherever you're listening right now and leave us a review. It helps more people find the show.
The Money Stuff Podcast is produced by Anna Mazarakis, Moses Andam, and Alexis Hott.
Our theme music was composed by Blake Maples.
Thanks for listening to the Money Stuff Podcast. We'll be back next week with more stuff.